Hi, good week to all. This is Kelvin here again. Welcome to this week's latest edition of our weekly technical outlook on the major stock indices, where we'll be covering the latest key elements, the trend buyers, as well as key levels to watch on the SPX 500, the NASDAQ 100, the Hong Kong 50, the Japan 225, as well as the German 40 for the week of 4th of April to 8th of April. So before we start, let's take a look at the disclaimer slides first. Okay. All right, here we go. So let's take a look at the momentum analysis across the globe from US, Asia to Europe, the major stock indices. So as we could see, the four major US stock indices, the SPX 500, the NASDAQ 100, the Dow Jones Industrial Average, as well as the small cap Russell 2000, has been overall, it seems to be that they are doing a bit of a minor consolidation after 2 weeks of strong move. Okay, so if in fact, yeah, the prior 2 weeks of strong move. So if you look at the SPX 500 is almost unchanged. The Nasdaq 100 is up around 0.72%. The Dow Jones slightly down by 0.1%, and the Russell 2000 actually kind of the second outperformer, up by 0.6%. So overall, if you look at the momentum analysis, we're taking into account their last week performance versus the prior 4 week average, quite something like a rate of change. Uh, it's kind of flattish as well. That means there's what I call it momentum that starts to turn flat. So what we could see over here is last week performance was more of a consolidation rather than a change in their medium term trend. So later I'll share with you on the individual technical analysis chart of the SPX 500 and the Nasdaq 100. Why the odds are still in favor of this ongoing medium term uptrend that is still intact from the mid-March 2022 low. Then what's interesting over here is the Hang Seng Index as well as the Hang Seng Tech Index. Momentum seems to be coming back on the positive side. So last week was actually they are the top outperformer, despite that Shanghai is actually now still in a lockdown, and there's a potential possibility that officially they are on lockdown 8 days, but majority of the commodity may start to see further extension on some form of quarantine. But that markets tend to be forward-looking. So what we are seeing over here is that given Shanghai and as well as Shenzhen, which was previously in lockdown mode. So these two are key commerce hubs in China. So what we could see over here is that in the next 1 to 2 months, especially evidence on the China PMI data, which is actually out on last week, showing mode of contraction, growth contraction for the month of March. And what we could see over here is for the early part of April, we may start to see similar slowdown as well, given the slowdown lockdown that was actually being imposed in Shanghai and Shenzhen. So that could actually increase the odds of front loading of we call it further means China top policymakers will be more in favor of bringing forward their targeted easing policy. That means we are talking about expectation of the start of a potential another round of interest rate cuts for this month of April, which is about 2 weeks from now. So market are have having this kind of expectation that is being built into it, and also on top of that, on Friday itself, or later part of last week, Friday, yeah, Friday, there's some signs of we call it agreement between the U.S. regulators and the Chinese regulators in this dispute about allowing U.S. Auditors or regulators to actually able to inspect the books of Chinese ADRs that are actually listed in the US stock exchange. So that actually reduces the odds significantly. We're talking about potential delisting of the ADR, Chinese ADR exchange, ADR stocks, like for example, we're talking about Baidu, or even Baidu is one of them, definitely. So, and others like, for example, potentially there are a couple of 200 over ADR stock, Chinese ADR stock listed in the US stock exchange. So the last couple of weeks, even the start of this year, we're talking about rumblings that this ADR was set to get delisted. So that actually increases the risk of China-related stocks. Okay, so this risk has started to subside definitely, and coupled with what you call increased odds of more policy easing policies that actually upcoming in the month of April. So that lead to a what I call outperformance of the Hang Seng Index and Hang Seng Tech Index for last week. And in fact, their momentum, or we talk about the rate of change versus last week performance and the prior 4-week average, has started to improve significantly as well, where we see the Hang Seng Index up by 4.4%, and the Hang Seng Tech Index is actually up 6.9%, the top performer of last week. And within our expectation, the Nikkei 225 actually tumbled within the technical range configuration that is in place since 3 months ago. So there was performance last week down negative 1.72%, and taking into account of the rate of change, we talk about the weekly performance versus the prior 4-week average, they're actually down negative 3.3%. So the German tax index not too bad. They're showing signs of resilience despite this ongoing Russian and Ukraine conflict, that they tend to face the brunt of it. Why? Because they're located in Europe, and as well as that Germany itself is also at the we call it the risk of higher energy costs, and also the dispute between the gas supply between Germany and Russia, where Russia will actually use the gas supply as a weapon in this ongoing conflict. But nevertheless, based on momentum analysis, the German DAX actually came within our expectation. They staged a rally, and later I'll show you the technical chart. Where do we go from here? Okay, so up 0.98% last week, and compared to its prior 4-week average, not too bad, up 1.2%. Now, before we go into the technical chart of the major indices that I would like to share with you, let's take a look at a quick glance of last week performance of the 11 S&P sectors, which is the main 11 sectors in the US stock market. So what we could see is what's interesting over here to highlight to you all is that the bulk of it over here starts to group into defensive sectors like the real estate up 4.4%, utilities up 3.7%, consumer staples up 2.3%. However, the growth related stocks like information technology is almost unchanged, 0.12%. And what's over here as well is that the industrials also did quite badly, negative 1.5%. And most actually is the financials that is the worst performer, that it came without expectations. So those who actually followed me on my social media, Twitter, and as which I tweeted out some of my team plays over the last couple of weeks, that we do expect U.S. banks and financial to actually underperform, which turned out to be as expected. Why? Because of this U.S. Treasury yield curve inversion. So what is it, all this U.S. inversion about? Okay, so I urge you all to actually follow my Twitter, where actually I explain to you all in snippets about what's this hoo-ha about this yield curve inversion, and why does it impact the US financials. And energy actually came down last week as well. Why? Because of the short-term softness in short-term softness that was actually being seen on since last Thursday on WTI crude oil prices, after the US administration, the White House actually announced that they're going to release 1 million barrels of stockpile per day from their US strategic reserve for the next 6 months, to actually reduce the propensity of higher oil prices going forward. Okay, so now let's take a look at the technical charts that I'll share with you. So very quickly, let's go to the CMC trading platform. Okay, so first off will be our S&P 500. So if you look at the S&P 500 over here, is that last week we're actually expecting a kind of decline or pullback, but the pullback we're actually expecting is supposed to come very close to the 4,400 and 4,330 level, but it didn't actually went to that level. And what's interesting over here is that on Friday it managed to stage a doji candlestick pattern. That means initially there was a sell-off, but this sell-off managed to actually close near the opening during the opening session. So that could actually indicate some form of potential bullish pressure coming back. And what's interesting over here is that the bullish pressure came very close to the 200-day moving average that has been taken out since 24th of March, now acting as a support at this 44.90 level, right? So so you look at the daily RSI, momentum still remains rather positive above the 50% level. So all in all, what we could see over here is that what it means that the current technical elements still in favor of this ongoing or current medium-term bullish impulsive up move from the low of 15th of March to actually continues its push up. And what we are saying over here last week, that this push up will be a residual push up of hope and irrationality. Okay, so very quickly, what is hope and irrationality? If you go to the weekly chart, this is where I highlight we are now in the process of this wave five, a potential wave five to complete based on the Elliott wave and the fractal analysis approach to actually complete the 13 year of long-term circular bull trend of the SPX since March great financial crisis low of March 2009, which is the risk level at 49.90, maximum 51.70 slash uh 5400 level, 5400 level before that 30% and 40% corrective down move to actually take shape over here. And fundamentally, uh, we were talking about there's risk of stagflation. The yield curve has really been inverted, the 10-year, 2-year, and the 35-year as well. So that actually give us a bit of forward-leading indicators are actually turning weak on the global economy, and which may high chance to should be translated back into the financial markets, but they tend to financial market tends to actually lag based on the yield curve, which I actually explained in my social media Twitter handle. There's actually a historical we call it I did a historical we call it observation on that. Okay, so now back to the technical strategy for this week is we were using 4500 level, which is the close to the 200-day moving average, 4500 level as my key medium-term pivotal support for this week, and the RSI now managed to shape a rebound close to this is the 4-hour RSI managed to close the rebound at a significant support level at the 36% level, very close to the oversold region. So using 4500 as a key medium-term pivotal support, we are still looking for a further potential push up towards 46.90, maximum 47.40 for this week. And however, if you have a 4-hour close below 4500 level, this is where we will start to kickstart that corrective decline to actually retrace close to 50% to 61% of this medium term impulsive wave up move from 15 on March low over here. Okay, so that's 50% and then 61.8%. Right. So now similar configuration on the NASDAQ 100. So if you look at the NASDAQ 100 over here, the 50-day moving average right now, the price actually has already surpassed it, and now it's coming to act as a support very in the coming days towards 14,600 level. So it's still trying to struggle below the 200-day moving average, try to breach above it, but managed to actually did that pullback. But however, that pullback over here, not so great in terms of strength versus the SPX 500, but I still managed to form a kind of a bullish hammer, okay, close to this 14,600 intermediate support level. And the RSI still remains positive from a medium term perspective, as indicated by the daily RSI, still hovering above the 50% neutrality level. And if you go to the strategy, the short term chart for this week over here is that the 4-hour RSI managed to shape a rebound close to this key corresponding support level on the RSI, which is at 42, which is at around 38%. And this is actually linking the lows of 24th of February and 8th of March, where the RSI starts to first flash that bullish divergence, indicating to us that this prior down move over here is losing upside momentum. So now the RSI has managed to pull back, coming very close to the key corresponding support at the 38% level and now showing signs of a rebound off from it. So indicating to us that hey, short-term upside momentum has started to re-emerge as well. So using 14,670 as my key medium-term pivotal support for this week. So we are still expecting another leg of potential up move to test the 15,540 resistance level, maximum 15,780 slash 900. So this is a graphical congestion zone over here of 13th of January, and also based on Fibo expansion level is at the 0.618%, taking from the lows of 15th of March project to the high of 23rd of March to the low of 24th of March, as well as 76.4%. So this is your classical, we call it wave 5 target to actually complete this medium term impulsive wave 1 slash before that more steeper pullback take shape to actually retrace 50% to 61% of this move. But however, if we start to see a 4-hour close below 14,670, then we will start to see the start of this steeper pullback move to retrace this first leg of this impulsive up move, which is the 50% to 61% retracement level over here. taking from the low of 16th of March, 15th of March to 30th of March. So 50% and 61%, which is at the 14,300 and 13,900 level, support level. So that is no pretty much unchanged for the Hong Kong 50 index. So you look at the Hong Kong 50 index, it's still last week they actually kind of trapped within this sideways configuration since hitting a high of 22,400 on 23rd of March. So technically, right, it seems to me that it's trading with kind of a ascending triangle configuration where we start to see a similar range high but higher lower. So this is a kind of a symmetrical triangle range configuration. So it's a bullish configuration. And also the 4-hour RSI managed to hold above a key corresponding support at a 41% level. So what I do is that for this week, I will tighten the key medium-term pivotal support from 20,100 up to 20,960. Give a bit of excess below these lows over here, the lows of the ascending triangle. 20,960 will be my key medium-term pivotal support. So anything above this level here, we will maintain that bullish bias to actually go up towards 23,100 level, 23,000 level slash 23,380 level, which is the 61.8% retracement of the last steep down move over here from the high of 10th of February to the low of 15th of March. Okay, it's close to the 76.4% level. Okay, and also if we were to go into, wait, let me clear this. All right. So if you were to go to the longer term chart, the weekly chart over here, this 23,000 level was actually the former long term pivotal support. Now it's turned into a pullback resistance. Okay, this on the weekly chart. Okay, then definitely if we have the 4-hour close below 20,960, then we will see a steeper pullback to actually come back towards that 20,100 level, and a break below it may take us down towards close to the 15 March 2022 swing low level at 18,1360, 18,136 slash 18,050 level. All right. Now moving on to the Nikkei 225. So over at the Nikkei 225 over here, what we saw last week still recall that we actually playing that pullback within that descending range configuration. Okay, so this descending range configuration is in place since 13th of September, March 2021 high, which is a 34-year high, or the Nikkei 225 or the Japan 225 we call it. So that resistance is at 28,500. So we kind of turned bearish to play that retracement, to play that push down from this we call it bearish reaction of this 28,500 resistance level in first step. So, but however, if you look at it, the medium term momentum, right, still remains positive, especially the RSI still remains above a key corresponding support at the 47% level. And what's interesting over here is that previously there's this double top configuration. Okay, let me, so, okay. Okay, so this double top bearish configuration, it did a breakout on the 21st of January, and the low of 8th of March is actually corresponding very closely to the exit potential of this bearish double top, as you can see from here. It's measuring the start of the emergence of the start of this emergence of this double top, and you project it down upon the bearish breakdown. So it's very close. The low of 24,480 slash 24,180, the support level, is very close to the exit potential of this bearish double top. So indicating to us, right, that means this bearish double top, the 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 downside momentum has more or less already reached its target. And what's we see possibility over here is that in the coming weeks, right, the chances of it to actually break below the 8th of March low right now seems to be pretty much remote. So what we have over here is last week, if you recall that we have a first target of this close to this 27,000 560, which is my first downside target or support level, which has already been met. And the second support level to watch should be 27,100, which is very close to it. So what we could see over here right now is elements are rather mixed right now. It's still mixed, whereas the shorter term RSI is still being kept by this descending resistance level. Now I think as a descending trend line, now I think as a resistance at the 50% level. So for this week, well, I will actually turn neutral between 28,500, which is last week's bearish reaction off from it, and the support level of 27,000. So more like a sideways configuration between these two range here, unless we have a bullish breakout. That means a 4-hour close above 28,500 level that I could validate a further push up towards 29,390, maximum 29,900 level, which is the swing high area of 5th of Jan 2020 and 16th of November 2021. And if we do the Fibo retracement, taking from the 34-year high of 14th of September 2021 high to the recent 8th of March 2020 low, it actually correspond close to the 76.4% level. All right, for the 5th of June 2021 to swing high area at 29,390. So turning towards a neutrality stance for this week at 28,500 and 27,000 figure level on the Nikkei 225 or the Japan 225. Okay, then next up will be the German 40 index. So if you look at the German 40 index over here, is that last week we actually had a resistance zone to actually take a look at. Will be 14,800 slash 15,030, which is already been met last week, hitting a high of 14,926 level, which is the lower boundary of that resistance target that we mentioned. So what we could see over here is that this zone over here is pretty critical. Because why? Because it's a pullback resistance of a former range support that is in place since 6th of October 2021 low. This zone over here. So RSI still remains kind of a pretty positive, still holding above the 50% neutrality level. So what we could see over here for this week is that potentially we could see another round of further push up into this zone here to retest it. Then thereafter, the German 40 may face a bit of challenge for the bulls to actually in order for them to see a further upside potential to actually negate the risk of this whether this is a dead cat bounce from here. You got to break above this 15,235 level, which is the max, which is the pullback line of this for pullback resistance of this former we call it for former range support turns into a pullback resistance. So what we have as the strategy for this week is that we will still continue to be bullish, especially why? Because you look at the RSI. The RSI managed to stage a rebound right off a former trend line support, trend line resistance broken, turns into a support level, tested one time over here, which the price station rebound, tested the second time, it station rebound last week, and now on Friday it tested again and station rebound from it. So what we could see is that short-term momentum still remains positive. So we will tighten the key medium-term pivotal support this week to 13,990 level, which is the former swing high area of 10th of March, 11th of March, and as well as 15th of March. And if you were to draw the Fibo retracement from the low of 7th of March to last week high, here is close to the 38.2% retracement level. So as long as this level holds, we are still expecting another push up to actually retest that 15,030 slash 15,235 level, that key pullback resistance level. And from there, we're going to be more cautious when the price action tests this level. Unless it could have a daily close above this level, that we will validate a further up move towards 15,500 slash 15,700, which is the congestion area over here from 10th of January to 1st of February this year. But however, if we start to see a 4-hour close below 13,900 level, then we may start to see a deeper pullback level to test the 61.8% retracement of this current up move, which is also the coincide with the minor swing low of 11th of March 2022 at 13,600 level slash 13,340 support level. So overall, if we could sum up in this week technical strategy for the major stock indices, we are still looking for a continuation of this potential impulsive up move since the low of 7th of March or 15th of March, depending on which indices you look at it. And we are still looking for a further potential up move on the indices that I share with you all. So before we go, right, will be my social media account where, like I explained earlier, where I share the emerging theme plays in the market and what are the current, we call it happenings that they're actually taking shape in the markets at this juncture from a cross asset perspective. So you can give me a follow at Kelvin SC Wong. So you just open a Twitter account, it's free. Then from there you actually follow at Kelvin SC Wong, and you're able to see my daily commentary. And I also at the start of the week I will highlight a chart of the week. it could be any we call it asset classes. So this one I have highlighted Apple. Why? You can actually take a look at it, and this will be my thread, early morning thread, a daily commentary to give a update on what's going on in the market and what are things to look out for. So do give me a follow, and hopefully that I'm able to give you all more mechanics and understanding what is the latest we call it ongoing that is actually taking shape in the global markets. So with that, have a great trading week ahead, and I see you again in my next video.